Hope you guys are all having a great and amazing day today. In today's live stream, I wanted to jump in and talk about swing trading. So I hope you guys all enjoyed this type of live stream. This is kind of one of the first that we have done for swing trading only, but we'll also cover stocks and stuff like that, whatever you guys want to cover. But I do want to break down some of the stocks that I'm looking to swing trade. So guys, I hope you guys all enjoyed this video. I am just getting and making sure we are rocking and rolling here on YouTube, and there's no issues, and it does look like we are good to go. So I did put my new course down in the comments, so if you guys want to check that out, you guys can use code YouTube to get 20% off. This is where we pretty much talk about how we find opportunities, psychology behind it, my swing trading strategy and mindset. So I put that in there, so if you guys want to sign up, that's fantastic. But looking at this stock here is Disney. Now Disney stock is one that I've recently came across because of this. Now, looking at it here, you guys will see that it recently has this tendency of using this 90 moving average line, so this green line, as some support. You guys will notice it hit it about 2 times right there, and then it came down in here, hit it again, establishing, a little bit of some buying pressure. So right now, I do think this does look like a decent opportunity to hop in on Disney stock for a possible swing trade. Not only do we have that great moving average line, but we do have some price support. So looking here, you guys will see we had tendencies of getting buying pressure at $81, right? It came back, hit it, and it got buying pressure. It hit it again, and we got buying pressure. Now, it's not like we've seen major sell-off. We've kind of seen a little bit of some consolidation, which is really, really interesting. So for me, Disney stock right now does look like a relatively decent opportunity to possibly hop in on a swing trade. Now, for me, hopping in on this trade, what I would do is trying to figure out my risk management. I would hop in at 82, set stops at about 75. Now, I would pretty much be risking $7 to possibly have this stock come up to the nearest resistance at about 108. So I'm risking $7 to possibly make near and around 20-ish dollars, which is a relatively decent risk and reward. But as well as we've seen a lot of buying pressure where this thing has squeezed up to 150, 200. So there is a lot of opportunity for this one, but obviously we are still on that short-term downward trend, as you guys can see. But I do think we could possibly see a little bit of a turnaround in Disney. They just they're investing $60 billion into their parks. So I do think we'll see some increasing revenues. We'll see a variety of things starting to come about, which is fantastic, as well as they're kind of changing up the game in the box office, as because the past couple of movies they've actually lost billions of dollars. So right now this could be a beautiful play here, hopping in at 81, setting stops at 75, seeing if this thing can squeeze up even higher. Now, another stock that I recently kind of recently came across that is relatively interesting here is going to be this Google. Now, Google for me is a perfect long-term opportunity play. You guys will see we had some tendencies of seeing, this 134 area as resistance, right? It came in, broke above it, established some support, and we did get a little bit of some buying pressure. Now, recently, it curled back down. So my question is, I wonder if we'll slowly start seeing some buying pressures entering there, as well as looking at the RSI here. You guys will see that right now it's at about a 51. Historically, anytime this thing is at a 51 does represent a relatively decent opportunity to buy, right? Looking here, 51. The last time it was there was right in here. Boom, we got amazing buying pressure, as well as right in here. And what do we have? Buying pressure. We had some buying pressure. So right now, for me, I definitely think Google is a good little play here. But, swing trading is all about capturing those short-term momentum. But we could be paying a little premium for Google. But I do think there is a possible opportunity. Now, anytime we look at charts and stocks, for me, I think it's always good to go to the groups tab right here on Finvest. Now, the reason why is going to the group tab, it kind of gives you an idea of what sectors are performing well, especially for your trades. And it kind of tells you what to invest in, honestly, because if you're looking at it here, what we've seen, if we go to like the week performance, you guys will see that energy is up, customer defense is up, healthcare, communication services, maybe some things to stay away from, in the short term would be real estate. Real estate's down 4.5%. Looking at the 1 month, real estate's down in the bottom as well. The 3 month, real estate's down. The half year, real estate's down. So, in the 1 year, real estate's down. So maybe staying away from real estate for swing trades would be a good play, because you understand there's going to be more selling pressure involved in it. And maybe some stocks to possibly look at, in the short term could be customer defense, energy, communication services, all these ones that are relatively decent. What we've seen too, you may be saying Carter, well, technology, we've seen major sell-off. We've seen a weak sell-off here where technology is kind of in the middle. The 1 month performance, technology's up. But, if we go ahead and we look at like QQQ, which is pretty much the NASDAQ here tech ETF, you guys will see that we've seen a little bit of some volatility lately with these tech stocks. Looking here at QQQ, you guys will notice that we have that tendency of getting buying pressure near and around 350, 354-ish, right? It kind of hit it once, twice, 3 times, 4 times. Now, recently, we could be hopping in on a relatively decent trade here and hop in and kind of see what happens. Let me get my trendline tool so I can show you exactly what I mean. So buying pressure here, 1, buying pressure here, 2, and then recently we're having this. Now looking at it here, I definitely think we could possibly see obviously one of 2 things. So we could see immediate buying pressure where it goes back up to this resistance at about 332, or what we could see is a breakdown of that support and have it push below 350. So for me to possibly hop into this one on a swing trade, what I would do is I would set my stops. So set my stop loss pretty much at about 349. So I'm risking $5 to possibly have this thing come up to resistance at 372. So I'm risking $5 to possibly make about a little less than $20, $18. So that's a great risk and reward. That's, over 3 to 1. So virtually with this type of trade, I could be wrong about 3 times and still make money on it. Now, as we zoom out, let's actually look and kind of see more of what we understand about this ETF here. Now, looking at it here, you guys will see we did get a decent amount of buying pressure on that 90 moving average line, and it really doesn't play a huge factor in that 200 moving average line. As you guys can see, it breaks above it all the time. It sells below it. So what I want to do is let's go to the weekly chart and see if anything changes. So the weekly, as you guys can see, is a little clearer. It does use that 200 a lot better as resistance. As you guys can see, it kind of hit it once, really hit it in here, and we did get some buying pressure. So for me, there could be a little move, as you guys can see, where we had that little consolidation points at 354, possible swing up to, now looking at it, probably 368, which would still be a good risk and reward. But that would be kind of how I would go about approaching this, with all these tech stocks here lately. But, swing trading, it all comes down to paper trading. So practicing these types of trades and finding these opportunities. For me, I love to use Finvest. I love to use Moomoo. They're absolutely fantastic. Going through, exploring these opportunities, find stocks that are moving, getting talked about, using the hot strategies here on Moomoo, seeing, the whatever one, the double bottom, we could pull up SDA and see what's going on. SDA does look like it does have some support here at about $8.95. So setting those alerts, setting all of that stuff is going to be key for making these trades, because the only difference and the only thing that's separating you, if you're making $10 a day, the only thing that's separating you from making $100 a day isn't your strategy, it's actually your share size. So I think with that being said, it all comes down to just starting, compounding that account, building it up. But overall, guys, I'm super excited to see, where this channel goes and kind of where everything goes. But yeah, that's where I'm at right now. Hope you guys are enjoying this live here. But yeah, I wanted to just kind of see what we got going on here. BHAT up 16%, which is insane. You guys can see that momentum there. This would be some sort of momentum play. As you guys can see, it squeezed up, possibly squeeze up to 210, but that's more definitely higher risk for me, for sure. But and you never want to trade stocks that are up 16% or even pretty much above 3, just because they're so incredibly risky. So you guys can see this is a textbook trade here on understanding how that 90 moving average line is super, super important when it comes to understand support. You guys will see it hit it once, twice, 3 times, 4 times, 5 times, almost 6, 7 times, and near and around that price. Every single time we've gotten just a tendency of getting buying pressure. So now looking at it, you guys can see it a lot clearer that 1, it loves that 90 moving average line. 2, heavy support right here at 15. 3, resistance here at about $17. So you can make textbook trades just by understanding that support and understanding that resistance, just like that. It's absolutely beautiful. And that's kind of a clear example of understanding, drawing out supports, drawing out resistance lines. And yeah, that's how you make money swing trading. A lot of people love to overcomplicate it, but honestly, all it comes down to is just finding these opportunities, drawing out supports, drawing out resistance, and just seeing where the stock is, understanding that risk management, making sure you're getting 2-to-1, 3-to-1 risk and rewards. And that's kind of what I do every single day, every single night, is just practicing these opportunities, going through here, going through FinVez, looking at stocks that are on the trend lines here. So if we go to home, we can go to channel up and look at these plays, stocks that are getting buying pressure on some sort of support line. Something like STT looks super interesting for a possible move. STT, we hop in, let's pull it up here. Heavy support, guys. Where's that support? Heavy support right here at about 64. The only thing I don't like is that downward trend, but still, looking at it here, heavy support, hit it once. We could see a move up to this 90 moving average line, setting stops at 63 or even 62. So we're risking $2 to possibly make $6 or $4, really. So that would be a 2-to-1 risk and reward. That's a great opportunity, finding these plays. And all I'm doing is just going through and analyzing these charts, drawing out those supports, drawing on those resistance, and seeing where the stock's going, what's going on, what are previous tendencies it's done, looking at history, looking at these moving average lines, looking at the RSI, seeing how it reacts to it. So I do think we could possibly see a little more sell-off just because the RSI, for it to get a lot of buying pressure, it does like to go down to like that 37 mark. So right now, I would set an alert here at about 63, set stops even at 62. So now I'm only risking about $1 to possibly make upwards of $6, $7, which would be a way better risk and reward. But guys, this is how you swing trade. It all comes down to finding these plays. I do have everything in my masterclass.